Hey everyone, welcome back. Hope you are having a great weekend. Today is Sunday. I spent pretty much all weekend just kind of lounging around, hoping to rest my voice up a little bit, and hopefully I can get through this without major interruptions in my voice. A couple other things that I spent about 5-6 hours also going through some data as far as the miners and their last quarterly reports as far as their assets, their current liabilities, future liabilities. Put it all into a spreadsheet. We'll take a look at it to see if any of the miners are going to be in trouble if Bitcoin obviously goes down a little bit more. So we'll take a look at that. We'll also take a look at the miners, see how they did for the week along with Bitcoin, compare them all. It's not looking good, obviously. And then we'll also take a look at a story here from DigiHost as far as the New York ban on mining and what it actually entails. And I think it's actually pretty good. Good news there, but we'll get into it as well. So as always, you guys know the drill here, not financial advice. I'm invested in the following coins and companies. And let's get into Bitcoin first, see what's going on with it. It's obviously not doing that great. So here's Bitcoin right now. It is at 33,574. Oh, I wish. No, I'm looking at the wrong one. Sorry about that. It's actually at 27,340, which it has fallen below our support here at the green line, the dashed green line, at 28,700. It looks like we're possibly going down to this blue line. The blue line is our next possible support at 23,800 or so. And this line coincides with some support that we saw back here, which was back in, I believe it was December of, let me see, right around December of 2020. So it goes quite a ways back. If we don't hold this line here, we may be coming back down to about 19,000, where we have some support along with previous support back in 2017, when we obviously reached that peak then on that bull run. So we'll see how this goes forward here in the next couple of days, weeks. But like I said, it looks like on the chart we are going to be going down, and unfortunately I was correct. I would have much preferred to be wrong on this. I would have preferred Bitcoin to obviously go up, but it is what it is. And looking at the daily chart here, we can see RSI is coming down, but we still have a ways to go before we possibly get down to here. So going from where we are now to here represents about 13% drop. If I'm remembering this correctly, let's take a look at here. So from here, going down to here, it is, about 13% drop. It would also represent a drop of about 65% from the top. If we look at it from here all the way down to this line here, we're looking at 65% of a drop. So that would obviously be a substantial drop, which would coincide with the bear market typically seen in Bitcoin. But right now, I think we're going to have to battle this through a little bit, see if we can actually hold support here at the 23,800 mark. If we can, that's great. And then potentially through the summer, hold that line. And then maybe towards the fall into winter, maybe you might be going back up. But right now, obviously, it's not looking good. So not financial advice, but I wouldn't recommend buying anything, at least not right now. Maybe dollar cost averaging a little bit, because I don't know exactly where we're going to end up. I don't think anybody does. But there are some obviously speculations that 23,000, 24,000, right around there might be the mark where we end up at. So I'm going to be probably looking to nibble a little bit this week. If the miners are obviously going to fall pretty big on Monday tomorrow, I'm guessing, with Bitcoin coming back down quite a bit in the last 2 days over the weekend. So we'll see where that goes. Ethereum, same thing. Ethereum is at 1,476. It has fallen way down. You can see it here on the RSI and the daily. It is about the same spot it was back on May 11th. And we were at a price of, we closed at 2,075. So obviously a big drop in price, almost 25%, a little bit more than 25% drop in it. And the RSI is, same spot. So I think we may go down a little bit, have a little bounce, but we'll have to see how well it plays along with Bitcoin. As we can see, Bitcoin is still not below the oversold territory. It's at 35 right now. We need to get it below the 30 mark here. So it'll be interesting to see where we go. All right, so let's take a look at the miners, see how they did for the week along with Bitcoin. And then we'll get into the stories here that we have and looking at the debt the miners have right now that was last reported. So here's the chart for Bitcoin and miners for the past week. I mean, we can see here we are obviously swimming in a sea of red here. Everything's pretty much red. We have only 2 greens. One is for DigiHost for the 4 weeks, and one is for Mawson on last week. It was up 2 cents, 0.96%. So let's just go through this right now. I also added a column here for the lows to see if we can keep track of where the lows for the 52 weeks are and where the price is right now to see if we have possibly bottomed out. And that's the only thing I added on to this chart here. So let's take a look at it. So Mawson was obviously ended out the week at 211. It was basically up 2 cents on excuse me, on the week, and it was up 0.96%. Bitcoin was at 29,083, so it was down $620 from the prior week to 209. And I got to take a sip of water. Okay, looking at DigiHost. DigiHost ended out at $1.65. It was down 14 cents, down 7.82%. Iris was at 482, down 58 cents, down 10.74%. DMG was at 27 cents. It was down 3 cents, down 11%. CleanSpark was at 490, down 67 cents or 12% down. Argo was at 53, down 8 cents, 12.4%. Sphere finished out the week at 90 cents, was down 13 cents or 12.62%. BitDigital at $1.42, so it was down 22 cents, down 13.41%. Marathon was at $7.54, down $1.26, down 14.32%. Core Scientific was at $2.33, down 45 cents, or down 16.19%. And then Riot was at $5.17, down $1.04, down 16.75%. Bitfarms was at $1.59, down 35 cents, or 18%. Hot 8 was $1.88, so it's down another 43 cents, down 18.61%. Hive was at $3.39, down 85 cents or 20%, which is quite a bit. Stronghold at $2.32, so that was down at 65 cents, down 21.89%. Luxfolio was at 13 cents, so it was down 4 cents or 22% on the week. So looking at the 1 week chart, we can see that Bitcoin did better than all of these guys. These guys got clobbered here. I mean, for the most part, everybody was down 10x here, looks like, to 9x. We got 7x and 5, and like 4x, 3x. So obviously, it wasn't a good week for the miners. It wasn't that bad of a week for Bitcoin, but the miners just got really, really beaten down here. Looking at the 4 week as well, we'll take a look at that really quick here. Do this by descending, and we'll take a look at see how that looks. And we can see DigiHost is the only one that's up here, 17% on the 4 week. And everybody else is down. Core Scientific is down the worst at 37%. Riot at 24. Hot 8 is down 24. Hive is down 23. And then everybody else. Bitcoin is only down 0.4% from 4 weeks ago. Looking at the 8 week. Descending, we can see here that everybody is down on the 8 weeks. Bitcoin's down 26%, and Core is down 62. Marathon is down 58. Hive is down 57. Riot is down 56. Iris is down 43, and everybody else is in line, falling as much or a little bit less, but still way worse than Bitcoin has done. And then looking at the final 12-week chart here, we'll take a look at it really quick. See how that shapes up. So Bitcoin's down 34%, and Riot is down 75%, Stronghold down 74%, Marathon down 73%, Core is down 72%. So double what Bitcoin is obviously down. Some of these guys are 1.5 to 2x of what Bitcoin has done in the past 12 weeks. So we see that. We've talked about it before. Bitcoin goes down, miners go down twice as much as Bitcoin does. Same thing happens when Bitcoin goes back up. The miners will go up 2, 3, 4x from there as well. So that's why I like this space, because you can obviously make quite a bit when Bitcoin's going up, but you can also lose quite a bit when Bitcoin's going down. So something to be mindful of. All right, so that finishes out the weekly review. Let's take a look at the story, one of the stories I have here. So this is a story that came out last week. I didn't have a chance to cover it, but I wanted to. Some of you had questions about the miners, especially the ones that are in New York, if they're going to have issues. And based on what I read here, and we'll get into it here, but this is from, when was this published? June 6th, on Monday of last week. The title of it was DigiHost enters long-term solar agreement with regional energy partner and provides operational update. Kind of vague there. I wish they would have provided actually, something about New York, Bitcoin banning or Bitcoin mining ban. moratorium or what it actually means. But down here, we'll get into this. So after reading this, I'm feeling pretty good about it. So here's what the bill had to say. Based on the language of the bill, in particular Section 7, which states that the bill is intended to take effect immediately and shall apply to all permits or renewal applications filed after such date. So when the bill went into effect, which I believe the governor already signed it, whenever that went into effect, that's when this basically goes into effect. The company believes that should the legislation be signed, which it has been signed into law by the governor, it will not apply to the proposed operations in North Tonawanda, as the company filed renewal applications for the plant in 2021. In addition, the bill also would not prohibit continued operation or expansion of several grid-powered cryptocurrency mining operations scattered across the upstate New York, including the company's East Delavan facility. So this is all good. If this is what the bill actually states, that previous application filings are going to go through without a problem. Anything that's new coming up is obviously going to be in not black, but it's going to be a that's the word I'm looking for. Moratorium. There it is. There's going to be a moratorium on any new licenses, basically. Nick Willis, in-house counsel for the company, stated the passage of the moratorium in New York State Senate signals New York State's continued desire to be a leader in developing technology for a clean future. Based on the language of the bill and the legislative record, it is our understanding that we would be exempt from the bill based on the filing of our renewal application with the PSC in April of 2021 and our filing with the DEC in November of 2021. In each case, in addition, the company is not using a retired plant, but rather adding use to a plant currently in operation, not only preserving high-paying jobs in the North Tonawanda region, but adding new jobs as well. So this is good. We continue to work with New York City or New York State officials to confirm this understanding and to ensure we are in compliance with all rules and regulations. So if that's the case, I don't think we have much to worry about the current miners that are in there. It's just basically anybody new that's wanting to get into it. Additionally, the company is pleased to announce that it is currently evaluating opportunities for operational expansion in North Carolina, Texas, Florida, and Maryland, visiting potential sites for mining which fit DigiHost's model of mining with low carbon emissions, generation, and energy being generated from renewable sources. So, in my opinion, this is all good. Obviously, guys that were already mining in New York don't have nothing to fear, it looks like. But we'll see if we can get some clarification, hopefully from DigiHost, from some of the other miners as well. So I think as long as nobody was planning to file applications after the bill was signed, those guys should be fine. So no worries there, but I still would probably recommend for the miners to get the heck out of Dodge. Go to someplace that's more friendly to the miners, Texas, wherever you can go, because you just don't know. You have some uncertainty there as far as New York is concerned. All right. So let's get into the miners and look at their debt. So I added this to the miner comparison here. So we're looking at the quarterly when they reported. So I put in the date of their last reporting. Took down the total current assets, total current liabilities. We're doing a current ratio, and we'll get into what that means actually. We're looking at the total liabilities, total equity, and then the debt to equity ratio, looking at that as well. And then also here I just added, if you took the total current assets and subtracted the total liabilities, so that's everything current and future basically, would they still have cash over or cash left over? We'll look at that as well. So let's take a look at what actually current ratio signifies. So current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year, right? It tells investors that and analysts how a company can maximize the current assets on its balance sheet to satisfy its current debt and other payables. A current ratio that is in line with the industry average or slightly higher is generally considered acceptable. A current ratio that is lower than the industry average may indicate a higher risk of distress or default. Similarly, if a company has a very high current ratio compared with its peers group, it indicates the management may not be using its assets efficiently, okay? So that's what that represents there. And then also debt to equity ratio. The debt to equity ratio is used to evaluate a company's financial leverage and is calculated by dividing a company's total liabilities by its shareholder equity. The DE ratio is an important metric used in corporate finance. It is a measure of the degree to which a company is financing its operations through debt versus wholly owned funds. More specifically, it reflects the ability of shareholder equity to cover all outstanding debts in the event of a business downturn. The debt to equity ratio is particularly type of gearing ratio, okay? So that kind of can help us out gauge these miners a little bit. So let's take a look at them here. So Sphere 3D right now has about 62 million in assets as of 331. Most of these are 331 except for Hive is from 1231. BitDigital is from 1231. DigiHost is 331. And then we got DMG at 1231 and Luxfolio at 228 on those dates when they reported. So obviously the ones that are from December are a little bit older. The ones from end of March are a little bit better, but obviously we are already 2-3 months into the next quarter, so things might change a little bit, but this kind of gives us a little bit of a snapshot as far as where they were then. So looking at Sphere 3D, 62 million, current liabilities, 6.6 million, not a lot, that's great. So current ratio is 9.35, so that means they could basically pay their current liabilities 9 times over, which is fine, so there are no worries there, at least on the current liabilities that they have. Total liabilities is 7.7 million. Total equity is 257 million, so that's a ratio of 0.03, so that's very low. They wouldn't have a problem paying off, all their liabilities. And then even if we used the total assets to pay off total liabilities, we'd still have 54 million left over, so that's good there. Marathon has 592 million in current assets. Current liabilities is only 14.8 million. That is a current ratio of 39.9, which is pretty high. But looking at their total liabilities, we're at 765 million, and total equity is 683 million. That is a ratio of 1.12. So that gets to be a little bit concerning, right? Especially when Bitcoin starts going down, it looks like we're short 172 million here to pay for all these debts. So obviously we're hoping that the current influx of money from either selling Bitcoin, hodling it, or they're going to possibly have to do some financing, share liquidation or something, if Bitcoin is obviously not going to be enough to cover that. So there's something that we may have to look out for as far as going too far into the distance here. So if Bitcoin obviously drops to 20,000 or somewhere around there, that's going to obviously weigh pretty heavily on what they're able to earn. So like I said, I wouldn't be surprised. Anybody that's negative here would be looking to either raise capital through share dilution or some other forms, whether it's loans or something like that, to get them through this period, or possibly also selling, because they do have quite a bit of Bitcoin on hold. Let's see here. If we take a look at Marathon's got obviously almost 10,000 Bitcoin. Which represents about 277 million right there. So that's quite a bit, but I think that's also part of their current asset mark right now in that. So we can't really use that too much, other than we know that they do have it in there. Let me see here. Okay. Next is obviously going to be Core Scientific. So Core Scientific has 808 million. Total current liabilities 414 million. So they have about 2 times assets to pay off current debt, current liabilities, but total liabilities pretty high. It's 1.7 billion, 1.57 billion, which is a lot. Total equity is 1.1 billion, so that's a ratio of 1.4. They are short about 769 million. They did sell, over 2,000 Bitcoins in May, proceeds of about 80 million. So that could be a sign that they are obviously having to raise capital to continue on their operations. And they are pretty obviously highly leveraged in debt. I think most of these miners were able to raise capital when the market was a lot better, where Bitcoin was going up higher. They did dilute some shares, took out some money, put it in the bank. So that helped them out. Obviously, Core came in just this year when everything was going down. So this makes it a little bit more difficult for them, I think. But something obviously to be mindful of is to keep an eye out for Core, Marathon, possibly selling Bitcoin, raising funds in order to get through this crypto winter. Iris has 269 million current assets. Current liabilities is 7.2 million. Current ratio is 37, so they could pay that off 37 times basically. Not a problem there. Total liabilities is 130 million. Total equity is 612 million, so that's a 0.214 ratio. They would have about 138 million left over if they had to pay off their total liabilities. So they're going to be okay, I would think. Riot is at 439 million, 0.7. for total assets, total current liabilities. We're looking at 116 million, current ratio of 3.785, so they could pay that off 3 times roughly. Total liabilities is 162 million, and total equity is 1.38 billion, which is quite a bit, and the debt to equity ratio is 0.117, and they would have about 277 million left over if they had to pay off all their liabilities from current assets. So we're okay there. Bitfarms, 323 million for assets. Liabilities is 142 million. That's a ratio of 2.26. So they could pay it off 2 times. Total liabilities, 179 million. Total equity right now is 459 million. That's a ratio of 0.39. That will leave them with about 144 million left over if they had to pay it off from current assets for all liabilities. So that's fine. Stronghold has 50 million in total assets, current assets, 124 million in current liabilities. So they are down 0.407. They are obviously heavily in debt to fund their operations, which also isn't a good sign. And total liabilities is 158 million. Total equity is 213 million. So that's a 0.742. Obviously, could be in trouble there, and their amount left over will be negative 107 million. So not a good sign for Stronghold either, especially as Bitcoin is coming down. So something to be mindful of with them. They're going to probably have to raise capital, do something to get them through the crypto winter possibly. CleanSpark is at 41.9 million current assets. Current liabilities is 22.5 million. That's a ratio of 1.85, so at least they can pay it off once. Total liabilities is 23 million, and total equity is 400 million. So that's a 0.06 ratio. That will leave them with 18 million left over if they had to sell their current assets to pay all the liabilities. So that's fine. They're going to be okay, in my opinion. Hive is at 268 for current assets. Current liabilities is 15.3 million. That's a ratio of 17.4, so they can pay it off 17 times. Total liabilities is 55 million. Total equity is 432 million. So that's a ratio of 0.128, and that would leave them with 213 million if they had to pay off total liabilities with current assets. So they're going to be just fine as well. Argo is 173 million current assets. Current liability is 72 million. They could pay that off 2 times. We have a ratio of 2.39. Current total liabilities is 118 million. Total equity is 198 million. So that's 0.596. They would have still 55 million left over if they had to pay off everything from current assets to total liabilities. So they're going to be fine as well. Hut 8 is at 453 million current assets. Total current liabilities is 22 million. So that's, they could pay it off 20 times basically. Total liabilities is 102 million. Total equity is 650 million. So that's 0.158. They would have about 350 million left over if they had to pay off their current or total liabilities from current assets. So they're fine. Mawson is at 12.8 million. They have 31 million in current liabilities. That's a 0.407 ratio. So obviously heavily indebted compared to what they have in assets. Total liabilities is 62 million. Total equity is 103 million. That's a 0.597 ratio to that, and that would be negative 49 million if something really bad happened. Bitcoin goes down to 10,000 or 5,000. They would be in trouble, obviously, along with anybody here that's negative, I would think. Let me know what you guys think of that in the comments, or if I'm getting this mixed up. I think I have this right. BitDigital is at 96 million. Their current liabilities is 5 million. So that's a 19 ratio, 19 times you can pay it over. Total liabilities 8.2 million, and total equity is 171 million. That's a 0.048. They would have about 88 million left over, so they're going to be fine. DigiHost is at 50 million current assets, 14.8 in current liabilities. That's at 3.395, so they're going to be fine paying those off 3 times over. Total liabilities is 17.7 million, and total equity is 79 million, so that's a 0.223 ratio. And they would have about 32 million left over if they had to sell a portion of, or all of it to pay their total liabilities, so they're going to be fine. DMG is at 39 million, almost 40 million, 39.9 million for current assets. Current liabilities is 6.2 million, so their ratio is 6.3, so they can pay that off 6 times over. Total current liabilities is 6.3 million, and total equity right now is 112 million, so that's a 0.056 ratio, and they would have about 33 million left over that they had to sell, obviously. Luxfolio is at 5 million right now for current assets. Current liabilities is 9.2 million. So that's a 0.55. Obviously, they don't have enough to cover current liabilities. So they're going to be having to sell Bitcoin and everything else to fund their operations. Total liabilities is 15.3 million. Current equity is 16.58. That obviously leaves us at 0.926. They would be shy about 10 million. So they need to come up with about 10 million, whether it's through selling Bitcoin, some other measures to fund operations going forward, I believe. So obviously the ones here that are negative are the ones that we really kind of need to keep an eye on as far as what are they going to be doing going forward, whether they're going to be raising capital through share dilution, selling Bitcoin, selling miners possibly also. They're going to be obviously being creative on it to see what they can do on that. So for the most part, I think the miners will be fine. Core Scientific is mining over 1,000 Bitcoin a month. So even if Bitcoin goes down to 20,000, that's still, what is that, 20 million if I'm not mistaken? 20 million in revenue for that. But it might be tough for them going forward, I think. So we'll see how they do. I'm thinking they're probably going to have to dilute a little bit, but we'll see. Not financial advice. Do your own research on this, as always. But let me know what you guys thought of this. But for the most part, I think the miners will be fine. Some are going to probably dilute. Some are going to sell. It's going to be a mixed bag of everything that we've seen in the past. So, like I said, let me know what you guys thought of this. Hope you enjoyed it. If you did, the spreadsheets are always available to my Patreon members. Thank you to everyone there for their support. Also, we're still waiting on 2 miners to provide their information here. Let's take a look at it. We got Miners Weekly. We're still waiting on Mawson and Luxfolio to provide their main numbers, and then we'll get into the miners as far as the miners comparison for the month of May. See how they did there. And something else that I've added here to the miners, I've actually included the BTC produced per each month here, but then we can see the BTC per petahash as well. The value obviously is there. And then per quarter, we can kind of see as far as the averages that they're making here on these, so that we'll get into that as well as we get new reports coming out as well. So a lot going on, a lot of updates, trying to make things a little bit better, easier for everybody. Let me know what you guys think. And if you enjoyed it, obviously hit the like button, subscribe, helps me out. So thank you so much for watching. Hope you guys have a great Sunday, the rest of your Sunday. And then hopefully we'll see how bad Monday's going to be for the miners, but fingers crossed, maybe it won't be too bad. All right, that's it.